Hi and welcome back to Cheeky Crypto. Today guys, we're going to spend some time taking a look at the Wyckoff accumulation pattern, the weekly chart, the monthly chart, and of course taking a look at some of the Bitcoin whales data and what is going on with them. As I get into this video, if you find it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, check it out guys, linked in the description down below. It's a fantastic community talking crypto 24/7. It's completely free, and I don't think you'll be disappointed by what you find down there. Okay, let's make a start with this one though. So Bitcoin paired up with USDT on the daily chart here, and Binance is our data source. Now, this is going to be, well, at least what we're going to be talking about is the Wyckoff accumulation pattern. There's actually two schematics. Let's go through the first one. This is the most common one that most people kind of know and will kind of acknowledge, and that is that we actually have a spring event. Okay, there's a second Wyckoff accumulation pattern though that does not have a spring event. So there's two of these. There's phase A, B, C, D, and E. A lot of people think that we've had the spring event and that we are in phase D or phase E. And I don't think we've actually had the phase C yet. I still think we're in phase B. So I'm going to walk you through kind of what this looks like, right? And essentially, pattern number one and pattern number two are exactly the same up until we get to the end of phase B. Okay. At the end of phase B, we're basically looking to test the secondary test of phase A, and in pattern number one here, we lose this support level and we go down into a spring event for phase C. In pattern number two, we find support down on the secondary test of phase A. Okay, they call this the LPS of phase C, and there is no spring event, and then we move on out. Okay, so when I come back to my chart here, we are mapping this as a phase B scenario because we've just had the peak up here above the automatic rally. So if we take a look at our schematics here, we have the automatic rally. We have then a push up into a resistance line. So we've had our automatic rally down here. We've pushed up in towards a resistance line. Okay, we then went down, and we went down lower than the selling climax over here of phase A, and we call this the secondary test of phase B. We then moved on up, and we moved on above our automatic rally, okay, which is where we are right now. And the next move is to come on down. And this is where it's going to be key as to whether or not we lose or keep the support level of the secondary test of phase A. This happens to be 18,626 USDT, okay, according to Binance. So we can see this dashed line just here. This is where we're looking to gravitate down towards. We lose this level, then I'm expecting us to lose the selling climax and lose the secondary test of phase B and come down into a spring event down here in phase C. Okay, and that would be schematic number one. However, if we come down and we find support on our secondary test of phase A, then we would actually find ourselves coming up in phase C, okay, and having another test of that secondary test of phase A before rallying on up out of phase C into phase D. No spring event. Okay, so both of these are still technically in play. Now, the issue that we have in, I guess, a lot of kind of different places across kind of the interwebs is that people think that we've already had the spring event. And I've been through this a dozen times or so. Where on Bitcoin's price action could this have possibly have been? Okay, so let's go ahead and try to make it fit. So over here, for example, we come on down, we bounced up, we came down, right? So we'd have to look at this area as our secondary test of phase A, right up here. Okay, that would be our secondary test of phase A. In fact, if I move this schematic just out of the way, just put it up here. We then have an automatic rally. That would have to be right here. Okay. We then have to come on down to a secondary test of phase A right here. When we have a move up above our automatic rally, that would be here. Okay. So at the moment, this is fine. We're following the schematic. Other than the fact that this is a bit high, but you know, we're following the schematic. Then we would have to come down into a secondary test of phase B. Okay. That would have been here. And then, of course, people are saying that we've had our automatic, or we've had our move upwards from our secondary test in phase B. However, we haven't gone above the automatic rally, right? This is lower than our automatic rally high, okay? And then people are now assuming that this down here is our selling climax. And I think you can all agree it doesn't work like that. It doesn't map like that. And we can quite clearly see that this being a move up here in phase B and then a spring event being down here isn't exactly a good fit because we haven't moved up higher than the automatic rally on the schematic. And both of these are the same at this point. So there isn't any other variation. The only place that we can actually get a Wyckoff accumulation pattern to fit on our daily chart, and I'm going to go ahead and remove that one, happens to be down here. Okay, so basically our June 2022 is the selling climax, and November is our secondary test in phase B. Okay, that's the only place that you can kind of even get this remotely loosely fitting. So we want to kind of keep these things in mind. This is still in play. The next move on the Wyckoff accumulation pattern is down, but of course, you know, if we were to go up higher than the resistances, which happens to be up here at 25,211, then not, you know, we're not doing a Wyckoff accumulation pattern. And again, we can put it to bed and just say that this is not what is occurring. But for now, it's mapping. And this is the only place I can get it to map at this point. So down is, if we are following this, is the only way it's got to go. So let's move on and talk about our weekly. Here we can see that we got rejected from the 200 EMA. This is on the USDT pair. The 200 EMA is different if it's a USD pair. So here you can see we got rejected right there. And, you know, we are overbought on this weekly chart. So on the weekly time frame, we're looking for progression to the downside. Okay, so we are looking for corrective action on our weekly chart. Now, if I come up into the monthly, you can also see that this is an area of resistance right up here. Now, our monthly stochastic RSI has started to peak on up, and it's interesting. This isn't necessarily going to mean that we're in a bull market. It doesn't necessarily mean that we're going to be in a bear market or anything like that. It's just interesting to note that the momentum has moved up. Our oscillator here has moved up, right? So the interesting thing about the monthly is that it takes a very, very long time to actually get anywhere. And obviously you can't just move in straight lines. We've been oversold for a while, and we're actually now just peaking above the oversold area. So yeah, this is it's going to be interesting to kind of see what happens next here. We obviously are up in this upper resistance between 23,300 and 25,200. You can see that this is where a lot of the sellers are. Now, I'm expecting this week to be a very bearish one. We've obviously got the Fed interest rate hike decision today. I think that's going to shock a lot of people, because I don't think it's going to be positive. I don't think they're going to pivot. I don't think they're going to ease. I think they're going to be just as aggressive, if not more aggressive, considering the fact that their debt ceiling has been reached, and they need people to feel poorer. So they're going to want to kind of keep attacking the inflation. It'll be interesting to kind of see. I mean, they could, of course, turn on the money printer, but then that would just make a mockery of everything that they've been doing so far. Yeah, it's one of those. It's going to be a real interesting day today, with obviously everything that's going on around that Fed rate decision. A lot of this could be priced in. We have to bear that in mind. On our daily chart, we are in the oversold area, but we can be down here for a while. We can see, if we go back a little ways here, we can see that we can spend quite a bit of time down in this oversold area. We've only just got here, so it's not going to say that we can't drop down, but I would be concerned to think that, you know, yeah, we could probably see a pretty decent correction, which is great, because I do think a correction is going to be due. And that might be enough to correct our weekly and then get us into a really strong position for a move upwards, right? No spring event in the Wyckoff accumulation, find support around 18K, and then just absolutely run from there. That would be fantastic. So that would be a good thing to kind of be keeping an eye on to see if that does occur. But yeah, so from our stochastics, it's an interesting position. Our volume profiles are also quite interesting, because we are decreasing in volume here as price has been pushing on up. And that does tell us that a bit of a reversal is due. We also are in this area here where we can see that we're higher highs and higher lows. They do have a tendency to break to the downside, so we'll keep an eye on that as well. Now, if I actually go ahead and bring in the relative strength index, where are you? Relative strength index, right on here. We can see that we're really high on our relative strength index here. Okay, so overbought, we are looking for a cooling off period. We are looking for corrective action on the RSI as well. I'm going to go ahead and move this into the existing pin above. So we can see here that we have, you know, an overbought RSI as well. So our relative strength index is telling us that we do need to start cooling off a bit as well. So keeping a close eye on that one, along with our stochastic, which is telling us that we actually are oversold. Now, the stochastic's really sensitive to price movements, whereas the RSI is not. So, you know, the differences between the stochastic version of the relative strength index and just the regular RSI obviously comes down to whether or not it is as sensitive to those price movements. Right now, we can see and acknowledge that those higher highs and those higher lows are expanding out. Okay, so a megaphone pattern. Sometimes this can be deemed positive, and yeah, so we'll see. There's probably a push up higher here to be had, but I think that the news today is going to create a lot of volatility. So do be incredibly careful if you're looking to trade the crypto space today. I'm personally stay out of it and wait for the chips to kind of land and see kind of what goes on there. But ultimately, that's kind of where that one sits. From our wallet count data, we can, of course, acknowledge that the whales continue to be selling. We have this data right in here where we can kind of see the wallet counts have been decreasing as this price has moved on up. So it's not really been backed by big players here. We can also see the same with the Kraken-sized wallets. It has been dropping to the downside. So here's the question, right? Because we did see some narrative out there a little while back of, that institutional players have been accumulating. Well, right now we are sitting on less wallets than we were at the beginning of December, right? There were less wallets holding 1,000 BTC now than there were at the end of December or beginning of December. Likewise with the Kraken-sized wallet, if we just shoot on back into November, these numbers are significantly lower than they were. Has accumulation actually occurred, or is the data being cut to omit certain pieces of information? Right now, I can see that actually whales have not been accumulating. Kraken have not been accumulating over the last couple of months. We can also see that very well if we actually zoom out on the whale counts. If I can find the right one, this one right here, we can see that they've been doing nothing but coming out of their positions for months upon months upon months. No accumulation has been occurring here when it comes to the bigger, larger players. The only exception is that of the Kraken. Okay, the Kraken, the 10,000 Bitcoin wallets, have been accumulating during this bear market. Started to fluctuate a little bit around November time, right? But they have been accumulating during this entire bear market. Now, we've got to bear in mind, what do the Kraken-sized wallets normally do during these kind of bear markets? Well, they do this. They accumulate and then they basically flood the system with excess Bitcoin. This is 2018, just before the actual bear market low, which happened over here. And what do we see? Well, we see a significant drop with the wallet counts of over 10,000 BTC, and that just so happens to coincide with the bottom of the bear market. Now, during the bear market, what do we note? We note that they were accumulating. They were accumulating the entire bear market, only to use that accumulated Bitcoin to flood the market with excess supply and drag the price down. Why do I say this, and why is it important? Well, we can see it. They've been accumulating during the bear market, and we're waiting for them to flood the ecosystem, to flood the markets with excess Bitcoin and bring us into the bear market lows. Okay, not only does the Kraken represent exactly what has been going on in 2018, but our whale wallets are doing something very similar. They are not backing any particular move. They're just coming out of their positions, and the only money that seems to be flowing in and accumulating BTC right now happens to be the retail investors. The retail investors are continuing to buy, thinking that the bottom is in. Every dip is a buy the dip opportunity. And at some point, I do think these retailers are going to succumb to selling pressure. They'll sell their Bitcoin to the whale players, and yeah, then the price will probably start moving on up. So let's be aware that, everything is not as rosy as we want it to be. I would love nothing more than to be in a bull market. I think that's yet to be confirmed. I'm looking for a retracement. I'm looking to see how price reacts at around the $18,626 level. And then from there, we'll be able to make a decision as to whether or not we want to be buying the dip, or we want to be waiting for those lows. Potentially dollar cost averaging, though, it is the best strategy. Obviously, I'm not a financial advisor. I can't give anyone financial advice. I only give you my thoughts and opinions on the data as I see it. I'm going to leave the video there, though, guys. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, then why not go ahead and subscribe and stay up to date with absolutely everything that we do here at Cheeky Crypto. Until the next one, have a fantastic day.